again, and then you. Okay, hey guys. All right, here we go. We are live on Facebook. I'm Brandon. This is the Visionary Experience. This is part two of our insurance and empowerment series. Last time, a little bit over a month ago, we had an amazing discussion. We have Herb Johnson of State Farm Insurance with us, and we have coming live and direct from Florida, Mr. Jacobi Jones of Goosehead Insurance. Listen, guys, last time we had a really amazing and engaging discussion. I'm honestly grateful that you guys have been able to make time from your busy schedules to come back on to the Visionary Experience. So, guys, thank you so much. Definitely appreciate it.
You're welcome. So thank you.
Absolutely. So if you're listening and you just have audio, that silence was them nodding their heads. All right, so great. So, all right, so Herb, I know that you wanted to. What we do here on the Visionary Experience is we essentially just jump right into our topics. We go right into it. We don't waste a lot of time. So Herb, I know that there's a few things that you wanted to start it off the discussion with. So why don't we just get right into it?
All right. So I want to talk about people who go out and buy cheap homeowners insurance.
Cheap homeowners insurance, okay. Go ahead.
And the drawbacks of that. You know, when we talk about blah blah insurance, right? Well, and you have a claim, and no one is around to take care of your claim. They have all these drawbacks. They don't want to pay the contractors. They don't want to pay anybody. That's when you know you have cheap blah blah insurance.
Okay.
And a lot of times people don't think about it until a claim hits, and they can't call nobody.
Mm-hmm.
And they call this 1-800 number, and they are nowhere to be found for you. But in the beginning of the process, it's like, oh, I want some cheap insurance. But your house ain't cheap.
Right.
Your house is
okay.
That's right.
Well, let me ask you this. So you're saying cheap. So distinguish between cheap and inexpensive. Or in your mind, is there a difference between the two?
Well, see, here's the thing. It's not like getting homeowners insurance is not like buying a car.
Okay.
Some homeowners insurance come with certain special features that take care of the person, the client, like service line protection. Like dig up in your yard, and the insurance company's like, well, what do you want us to do about it?
That's right.
Okay.
So so you want an insurance company that is a Cadillac of all Cadillacs. It's comprehensive, and the agent that you're dealing with is educated.
Got it.
If you're in the dark about what you're getting for homeowners insurance, then you have problems.
Right.
That's right. That's also like people always forget about flood insurance too. It's important. Any water coming from the outside of your house coming in, that's flood. It's not like a big Katrina event. It's any water, that's rapidly rising from the ground that comes in. Just because you have homeowners insurance, it doesn't cover that outside water, which is flood insurance. So
got it.
Yep.
Definitely having the knowledge. And like Herb said, you want to have all around protection. And that service line, buried lines protection, some companies call it, is very important. And I know people have seen, you ride down the street and someone has like a big particular equipment, and they're digging up their front yard because either the water lines froze or the backed up sewer line. That's not covered by your regular insurance company, and the city doesn't cover that either. You have to pay that out of pocket, to get a certain company that's going to dig up your lines out of the front yard or the backyard and unclog. Especially in Baltimore, we get that all the time. They have older homes, the galvanized pipes. Them things eventually are going to corrode, and some of them are 2 and 3 inches. It's not enough, not enough width to get out the sewer line. So you got to dig that up and put a new pipe in. Again, that's not covered. You got to get that endorsement, that service lines or that buried lines coverage. Also, right. Equipment breakdown. We offer equipment breakdown where it's going to cover your garage door opener, your computers, your washer and dryer, so you got all this stuff that you definitely need a professional to talk about to get you fully protected. And it's like pennies on the dollar. You know, you're talking about maybe $30 extra for the whole year. So definitely something to think about. And talk to a professional about getting that insurance cover.
Got it. Well, then let me ask you guys a couple of questions based on what you just shared. So what's the difference, Jacobi, on the insurance that you just talked about? Let's say the equipment breakdown, right? Versus a home warranty. Like, I guess, what's the difference, or is there any type of advantage between the two?
There is a big difference. Yeah, there is a big difference. So the equipment breakdown coverage is like, it might be $15 a year. Okay. So you're paying less than $2 a month for equipment breakdown. Now, equipment breakdown is it's like a faulty equipment. Like if you have a washer and dryer or dishwasher in the last, let's say, 5 years, and it just went out for no reason, or it might have been a surge event, and that particular device went out. Okay, but it doesn't cover if you have a 20-year-old washer dryer, which is over past its limit. That's why it's kind of so cheap. Now, home warranty, of course, you're paying a lot more. You might be paying $200-$300 almost extra per month, but that's going to cover everything. That's going to cover, you got a little clogged drain in your dishwasher. They'll come out and do that. If it's a newer, even if it's an older product, let's say you have a 30-year-old dishwasher, the home warranty is going to change that out, of course.
Got it.
But if you're paying a premium for that, and they charge you per device. So the equipment breakdown, less than $2 a month, and that covers every electrical device in your home. Your television, again, your computer, your cell phone. It covers everything in that household. But if it's a device that's outside its normal life, then it's not going to be covered.
So it sounds like maybe this would be something we could discuss with new home builders and new construction, where you're just getting into the house, everything is essentially brand new for the most part.
Yeah.
And there might be some policy that would be beneficial for individuals in that situation.
That would be good for that, because you wouldn't want to pay $300 a month for a home warranty, which first of all, you already got a home warranty. Normally new builders for up to a year. And that device is going to last, for 10 years. But if that equipment breakdown, that surge protection, light goes out, comes back on, power goes out, comes back on, and then all of a sudden your dishwasher doesn't come on, or your television blows out, that's when that equipment breakdown is going to come in.
Okay, got it. No, that's good for me to know. So let me ask another question that a lot of homeowners, typically would have. So let's say when you have a homeowner's policy, right? Let's say the typical deductible is about $1,000. Is that about right? Right.
Yep.
So if I'm understanding it correct, if there's any type of repair or something that has to be done in your home that's going to cost less than $1,000, you might as well just pay for it out of pocket versus putting a claim on your insurance.
Yeah. And that's what I tell my clients all the time. A lot of times before you even call, because a lot of companies, even when you call in that claim for, let's say you have a clogged toilet, okay, and you call in your the insurance company, some of them, to be honest, they'll put that claim, even though it's zero paid out, they'll put that claim out on your record. So it'll be a zero paid claim, and you'll see it. And when you change companies, that's always a problem for people. Come to find out, you call a plumber, it might be $200 to get that clogged drain, that clogged toilet unclogged. So, and you have $1,000 deductible. So if you have $1,000 deductible, they're only going to cover anything over $1,000. So it was really no point in even calling the insurance company to get that clogged drain out, because now it's on your record. They can see that, and they're not even going to cover it anyway. So it's really, no point. Even almost like your car, you might have a $500 deductible. Someone nicks your car, it might be $50 to get fixed, or your windshield or something like that to get a nick, a chip fix, and it's only $30-$40 if you call, but you have a $500 deductible. There's no reason to call your insurance company for something that's not going to cover it. It's going to go on your record as a claim.
Right, and that makes sense. And so one of the questions that has been asked of me, and also I have the same question, is whether it is with auto insurance or whether homeowners insurance. I guess every company is different, but at what point is there a threshold where they say, okay, you've had this claim, that claim? At what point do they then raise your premium, right? Or at what point is your policy in trouble with that
Well,
particular company and they may drop you?
well, here's the thing. I've worked with several companies, like from Allstate, Nationwide, Erie. They look at the frequency of claims, not always the dollar amount. So if you had, like, let's say 3 claims in the last 3 years, then they're going to drop you, especially if you haven't paid out that much.
I think we just lost Jacobi. He'll be back in a minute, but go ahead.
You know, they look at the frequency of the claim. So if I have 3 claims in the last 4 months, then they're dropping you quickly because they have lost money on your policy. Because let's say you're paying, like, average homeowners $1,000.
Okay.
You have 3 claims, and those claims are over $5,000. So the company is in the hole $10,000.
Right.
And they just got you.
So let me ask you this question then. Let's say if they are straight up legitimate claims, things that are either acts of nature, acts of God, like that have actually happened, doesn't matter.
Doesn't matter.
Jacobi's back. All right, does not matter.
It does not matter what type of claims they are, whether legitimate or not. The insurance company is looking at the bottom line.
The bottom line. Okay.
They looking at, okay, we just got you 2 years. We've collected about $2,000 worth of premium from you, or let's say $3,000 if the insurance is $1,500 for the month, and we already had $10,000 worth of claims from you.
Right.
So the insurance company is in the hole. If we calculate that, get $10,000 claims minus, let's say you've been with the company for 3 years, paying $1,500 in premium, they're in the hole already, $7,000. They're in the negative on your insurance policy.
Got it.
Let's say you haven't had a claim in 20 years. Because people are like, I've been with my insurance company for 20 years. Why they raise my rate? Well, let's look at it. You paying $1,000 or paying $1,500 for your policy, and let's say you paying $30,000 worth of premium over the 20 years, $30,000. But if your house burns down, they're in the negative instantly.
Right.
So it's like insurance companies, when they do insurance, it's like a gamble. They're gambling. They give you paying, wagering that you will never have a claim, but they're there when you need them.
Right. Yeah. Well, that makes sense. And the thing is, when I look at homeowners insurance policies, the amazing thing is someone's house may be on the market for $680,000, but the replacement cost of that is like $380,000 because that's what it actually costs to rebuild.
That's right.
Right. And that to me is amazing, like, to be able to learn that. It's like, well, wait a minute, insurance companies are really smart.
That's right.
They know what the deal is.
Right.
And you know what? That really goes to another topic too. When you guys are done, it brought me
go
to
ahead. Let's go right to it.
Yeah. So what I was about to think about, what I was thinking about when you said that, okay, why is the replacement cost $300,000 and I'm buying a house at $600,000, right? I'm buying it at $600,000, but to replace and rebuild that house is $300,000. Why is that, right? That goes into another topic. To me, is about someone who's renting. What's holding you back from buying a home, right? Because home ownership is wealth, okay?
Right.
And you can see that with the replacement costs, right? So it costs $300,000 to build the house, but the value of it is $600,000. You have wealth there. You have $300,000 of wealth, which you talk to somebody like yourself, Brandon. I can go in there and do a line of credit and take out 75, 80% of that 300,000. Let's say I'm at, I pull out $100,000 for my child to go to college, or I want to buy a car. We really need to talk about people transitioning over from renters or rentership to home ownership, because that is going to be long-term wealth. That same house you're talking about, Brandon, hey, imagine in 5 years, it might be worth 800,000 now,
Right.
Because I'm sure when that house may have been first bought, it might have been replacement cost 300,000, purchase price 300,000. Okay. But the value is going up. And with the, how low interest rates are now, you have bidding wars out here, which is driving the price up. Brandon, you can talk about this. There's low inventory from what I hear. So everyone's fighting over the same home, right? But listen to this too. And there's a guy that I listen to called Claude Anderson.
Okay, yeah, Dr. Claude Anderson.
Dr. Claude Anderson. I was just looking at an interview that he did with the Breakfast Club. And maybe you guys can put that up there. I'll send you guys a link. But what he talked about was, when Christopher Columbus came over, and kind of colonized the U.S., they left because in Europe, it was like no wealth to be gotten, right? Because you have everyone who owned a home. Like, even if you search for homes in Europe right now or in London, you have to rent because all the homes are purchased and they're passed down from generation to generation. So when they came over, it was a race, right? And that's why you get race. People think about race, right? But it really was a race to get wealth. And the way you win that race is through home ownership. It's about passing down homes because, again, we go back to that situation you said, the replacement cost of 300,000. It's already 600,000. Who's to say in 10, 20 years from now, it's not worth 1 million? And you guys from DC, I remember back in 2000, when I was just coming out of Morehouse College, everyone was flying up to DC. They were buying these $30,000 homes. Back in 2000, everyone was flying up. They were buying $30,000 homes and renting them out. I can imagine right now they might be millionaires, right? I mean, if they kept the homes. I mean, where can you buy a $30,000 house at in DC? You know what I mean? So this value is going up, and you keep the home where you can take the money out, right? You can, as the value goes up, you can use that for pay off debt, buy a car, send your kid to college, and you're just continually passing on this wealth. But from what I see in the future, that's going to be the difference between the have and the have-nots, right? Because pretty soon there's not going to be any homes available to purchase. Everyone is going to have, they're going to be, all the homes are going to be owned. It's only going to be new construction if there's land left. And I just go back and think about Claude Anderson, what he talked about. Hey, the race to wealth was, I have to leave where I'm at because I can't buy a home anymore. Everyone is purchased. Everyone is passing down home to home to home. So I see that right now. It still is a race, and now that the interest rates are so low, you really need to talk to someone like Brandon, get pre-approved, and join, home ownership with people who are passing down wealth and they have wealth. Because again, where can you gain $300,000 at instantly overnight? In 3 or 4 years, you're gaining $300,000, $200,000 in wealth. You really need to do that. It's not hard, and you also can be paying with interest rates now. You can be paying less than you are in rent. So it's important now. I'm telling you, don't wait. Don't waste any more time. Call Brandon. Get pre-approved. It's not hard. The stuff that and you can talk about this, Brandon. You have so many different programs. Interest rates are low. The requirements are laxed. You can get in. Your credit score is low too. You can get that increased or whatever. Get in there. Talk to Brandon. Get pre-approved.
Absolutely, I appreciate that. So let's stay on that topic for a second. Let's stay on that, because once you get pre-approved and you purchase a home, then look, the insurance is going over to Jacobi, is going over to Herb. We're going to make it happen.
Yeah,
that's right. Here's something important. Go ahead, Herb. I'll let you talk first, and I'm gonna mention something. Go ahead.
I think that's very important. You gotta get that education on how to get that home situation going.
Yes.
You know, because I know the inventory is kind of very low. But
Oh, yeah, it is. It is low.
but also you got to make sure that you have the right protection for your home, because that is your biggest investment. Because if you have, you know, cheap investment, then you're gonna get cheap service for your cheap investment.
That's right.
It's like for car insurance. There are certain companies that mechanics don't mind fixing, and there are certain companies that they don't like fixing, because people run to them. Oh, they got cheap rates, and you get cheap service when it comes to calling them. They're like, oh, let's run to this company. Let's run to that company. I'm not trying to put any companies on blast, so we won't get blasted for.
I'm about to put a couple people on blast actually in just a second.
Yeah.
I'm walking the tightrope. I don't care.
Yeah. I'm gonna let you lead it since it's your show.
Listen, there's been a debate going on somewhat with regards to something that Jacobi was talking about, people like renting versus owning, right? I think especially for individuals who are single. I've listened to a couple of podcasts recently, which I'm like, I totally disagree with what they're saying. So one, it's a really good podcast. It's awesome. It's called Earn Your Leisure. I don't know if you heard of it, but they had a guy that you guys have heard of. His name is Grant Cardone. He was on there, right? And he was just talking about renting versus owning, how it's just better to rent. And I'm listening to this like, no way, dude. It is far better to own than rent. Like, where is this nonsense coming from?
Right.
Because the thing is, if I'm renting a house and I'm paying $2,000 a month, $3,000 a month, I am literally building equity for the landlord. I'm literally building ownership for the landlord. And if I have a regular job, I'm not running a business out of that house, so I can't deduct anything, right? If a normal 9 to 5, you're not running your business out of it, so you're not going to have any tax deductions for it. Because he was talking about, well, you can deduct this, you can deduct that. No, you can't. That's nonsense.
You can't do that.
No, you can't.
That's right.
So it's like you're just building wealth for someone else, just like you said, Jacobi. It's like the people who are real smart, they own, they purchase and they own, because again, the individuals who are renting are building the equity for them. Now, this makes a couple of assumptions, because equity is the difference between what something is worth and how much you owe on it in terms of any type of debt. That difference is your wealth, it is your equity, it is your ownership. That's what it is. So I disagree with what he was saying. There's another podcast that I listen to regularly. It's called Valuetainment with Patrick David, who owns the PHP agency, which is one of your competitors. Okay. And they talk about renting on there. One of the people on there talks about renting, and he rents. Well, that's good for him. But the general premise, mathematically, business-wise, I just think is wrong. Just flat out wrong. And I'm willing to discuss that. Because again, especially as we talked about before, especially for minorities, because in this country, we have been denied the opportunity in your face systematically, intentionally for decades upon decades, right? It's been denied. It's like, absolutely not. If you have the capability, if you qualify, and you have the budgetary capability to do it, there is no discussion. There is no debate. Right? You should own and have the pride of ownership and have the advantages that come along with home ownership versus renting, and making your landlord rich so that your landlord could go spend time in the Cayman Islands chilling off of the passive income that they're making off of you. I mean, it really makes me angry. It makes me angry. But it's a righteous indignation. So go ahead, Jacobi. I know you want to continue.
And to that topic too, Brandon. From what you guys talking about, think about apps like Airbnb. You talk about VRBO. You can buy a property, and you can. And Herb, you can talk about this too with DC people. You can rent out your basement and have your whole mortgage paid. Right? Imagine that. Now you go from renting to not paying any rent or any mortgage, right? Or I'm getting a lot of people in DC that buying these these three unit apartments, right?
Absolutely.
Living on the first floor, and they rent out the second and third floor, right? Or like again, going back to the Airbnb, you can get your mortgage covered. You can get your mortgage paid for. Imagine, and in 30 years, you got a free home that you never even paid for, right? That's a whole nother topic there. That's
Preach it,
real wealth.
Jacoby.
That's real
Well,
wealth.
well, check
right?
this out, Matt. Like, here's the math. Let's use Jacoby's example. Let's say you're in Washington, D.C., or any other place where, let's say, you buy a 2-unit or a 3-unit property, for example, and you're living in one of the units, right? The other units are paying your mortgage per month. You can actually do bi-weekly payments where half of the payment is taken out of your account every 2 weeks, or you can pay additional principal. So mathematically, you're owning that house way sooner than 30 years. You might own it in 20 years. You might own it in years.
That's right.
You can work out the budget where, and it's being paid for you, right? So now you have a true full asset, right? Because the property
That's
in and
right.
of itself, yes, it is a liability. So let's make no mistake about that. We are not saying that this is kind of yours, because try not making some payments for a full month, 2, 3, 4, 5 months, and you find out who owns that property real quick. The sheriff's gonna be putting your stuff out on the stoop. The bank's gonna you'll find out real quick. But
Real fast.
it's a
real
liability, but when you own it, you don't have any debt, and you just have to pay your property taxes and your Cadillac homeowner's insurance, right? Dude, that's nothing. And you have such a cash flow every month that it is sustaining a wonderful lifestyle for you and your family, and allowing you not only to have a wonderful lifestyle for you and your family, but you can give back and you can invest
That's right.
in your community, and you can
That's
teach
right.
others to go ahead and to do the same, which is what Jacoby's doing.
Yeah, and
Yeah,
just
and
bring
look,
up something else. And just to bring up something
real
else.
quick, real quick, Herb,
Yeah, go ahead,
too.
Jacoby.
This is another thing we need to talk about, right?
Right.
Especially when you talk about minorities. Turn this off. People calling me. What are you going to leave your family when you pass away?
Right.
You gonna leave them a job? You gonna leave them your 9-to-5 job? What are you gonna pass on so they can live better than you?
Right.
Besides life insurance, the next best thing is home ownership. When you look at certain groups of people, why are they killing you? You don't own nothing. Your life is worth nothing. You can't even mortgage your home to get out of jail. You understand? That's what people do. You got an asset to do certain things with. So, we need to talk about that. Why are poor people poor? Why is that? They're not passing anything on to the next generation. You gotta have home ownership. You renting forever. Like I said, the only thing you're gonna leave is a car and a 9-to-5 job. You understand?
That's a good situation. Jacoby, tell them, did you pay for your agency out of pocket? A lot of people go and get loans from a bank to start the agency.
Hey, guess what? I got so many rental properties, they paid for it.
There you go. You heard it.
We talked about the Airbnb. And actually right now, I have an Airbnb in Fort Lauderdale that I have for about 3 years. And, I make like $3,000 a month off of that home. And guess what? Now I just blocked out the calendar. So me and my family can use it. So, there's different ways, man. And that's just one property. Imagine if now you go and buy others once you get your first one. You want to, be that first time home buyer, which you can talk about that, brand, first time home buyer. I don't know if they still got this. Is it 100% down?
Oh, sure.
And yeah. So I mean, you look at going into certain apartment buildings, and you got to put down deposit first month and last month. Brandon, he just told you guys, being a first time homeowner, that's 0% down.
Yeah.
I mean, what are we waiting on? What's the problem?
Right.
As soon as you get off this podcast, Brandon, put your phone number up. You need to pre-approve.
Anton, put my phone number on the screen. Yeah, I have my podcast engineer
on the
put it
screen.
on the screen.
Because these programs don't last. He just said 100% down. You can move out your apartment, get your security deposit down, and that's going to be money to furnish a new home. Come on, y'all. Come on, man.
We've been talking about this. Absolutely. Go ahead, Herb.
Playing games.
Yeah. So just like life insurance, you can be your own bank. through life insurance.
That's right.
A lot of
Yep.
people, it's not just a death benefit, it's a living benefit. Like people don't understand about universal life power.
Mm-hmm.
There was a lady who was short on payroll, right? Instead of going to get a loan from the bank, she borrowed from her life insurance.
That's right.
She didn't have to get no credit approved, nothing. So yeah, owning a house and having the proper insurance, proper type of life insurance, term only pays out death benefit only 10%. People outlive their terms. So people run into these Prime Americas and all that type of stuff, say, oh, buy insurance, invest the rest if you have the money to invest.
Mm-hmm.
Or if you have the discipline or the understanding of what to invest it in.
Right.
Yep.
90% of
and they're
Americans,
banking on the fact that you don't.
right. And the 90% of Americans don't.
Right.
And so you spend all this money. I had a lady that reviewed her policy. She had a policy there. And she got to the point of 70, 80 years old. And she paying $300 a month for her term. Money she'd been thrown away, which she could have rolled that over to a universal life policy and been getting cash value benefits. Something that, earning 2%. It's kind of, guaranteed at the time. I mean, the bank,
Mm-hmm.
you put your money in the bank, you're earning less than 1%. The
Way less
CD,
than that, dude.
yeah,
You're ordering
way,
like not even a quarter of a percent.
right.
Not even that.
So, and
And
investing
they taking that in monthly fees now. Banks take them what, $15
Yeah.
a month. You're
So
not
a lot
even
of
paying
time-
that off.
So a lot of times people, especially young folks,
Mhm.
the best time to get life insurance is when you're young. Well, I don't have a family. Well, are you planning on staying single for the rest of your life? Are you planning for the future? Some people, I learned this because, and thanks, Chris. Yep, 98% of the term policies never pay out.
Never.
Never.
It's a big business. Big business for
Never.
them. That's
Well,
right.
hold on. Let's stop right there. Okay. Let's be conservative, ultra conservative, and let's say 90%, right? For example,
Mhm.
right? This is fucking numbers here. We talked about this before. Insurance companies have very smart, highly paid people called actuaries or
Yep.
mathematical geniuses and say, okay, well, you know what? We're collecting 90% premiums on millions or hundreds of thousands of people for years. We're
That's
taking
right.
that money. I'm assuming they're investing it somehow because they're just not letting it sit around, right? So this is where all the money and all the profits are coming from. As far as I understand, you guys can definitely educate me more as far as that's concerned. So what that says to me is what you've been saying, Jacobi, and what you just said, Herb, is then you need to reinvest in yourself. Because when you're investing in the insurance company, right? Because they're betting against you. They're not betting for you, right? They're betting against you. So how can we begin to turn the tables and flip the script, right?
Well,
So that
well,
we can invest in ourselves.
Let's talk about this though. Why is it that 98% don't pay out, right?
Yes.
Let's look at Baltimore, Chicago. Okay, here I go.
That's right.
All
Here
right,
we go.
This past weekend,
Buckled in.
this past weekend we had 15 black kids that died this past weekend in Baltimore under 30 years old, right? Because they didn't have term life insurance. Now, if they had it, it wouldn't be 98% paying out. Okay. When you're looking at a sports event, they don't put life insurance commercials. Our community, we don't believe in life insurance for whatever reason. That's why they don't pay out. But we're dying the most. We're dying the fastest from gang violence, from whatever, from diabetes, because we got food deserts. If we had the term life insurance policies, they would pay out, but this is why they don't want us to know about it. They don't want us to buy that because we die the fastest. So, not to get too far into it, that's another thing that, you need to look at, home ownership and you get a term policy to cover that $600,000 home that you talked about too, Brandon.
Right.
So if you pass away, your family can pay off the home. That's another warranty. You want life warranty for your own personal body, but all this stuff, man, is big business for these people. And you got to kind of get on board. You got three professionals here, me, Brandon, and Herb. We can walk you through it. We can tell you how to navigate the ins and outs, what all this stuff means. Number one is, I think for me, is before you go shopping for a home, you need to talk to Brandon so he can tell you how much you can purchase a home.
Absolutely.
You got me or Herb. Herb is definitely a life specialist as well, to ensure you got car insurance and you ain't got life insurance. Your car crashed, they buy you a new car, your family gonna want that paycheck to keep rolling in too. So, definitely you got health insurance, you got car insurance, don't even got life insurance. Come on. You get life insurance to cover the home that you buy from Brandon. So, like I said, don't hesitate. You got the number, you got the email, but I really want people to take advantage of first-time home buyership, where you can get low money down and the interest rates are steady. Are they creeping up, Brandon? They're creeping up, right?
That's relative. Yeah. Like they're creeping up versus where they were last year, right? Like
That's
where they were, in the summer
But they're
and in the
still
fall.
low.
Yeah, they
Right.
were low. They
They're
were in the
still low.
twos. Oh, right. They're still in the high twos and low to mid threes,
Yeah.
which is amazing.
Right.
Which is
Right.
amazing. We were just talking about that yesterday on the Facebook Live that I did. I'm like, look, we're getting spoiled. Like
Mhm.
it's
That's right.
it's all relative. You're still getting a great deal. So I appreciate you sharing that, for sure. Jacobi, go ahead, Herb.
Yeah, and Jacoby brought up an interesting point about life insurance. My dad was not educated on life insurance, died without it,
Mm.
and he was 68. Unfortunately, got cancer, and he was gone. But he didn't have life insurance because he was never educated about the importance and the power of life insurance. And so,
You know what people say, and like my dad always told me, I got it on my job, right? I got life
Right.
insurance on my job. That's what people say all the time. But guess what? You're not going to be working at your job forever. When my dad retired at 65, right, his life insurance ended because he left his job, okay? Then he came to me and wanted life insurance. But at this point, he had high blood pressure and he had diabetes. And, all the insurance companies denied him at that point. You want to get it young when you're healthy. Even when you're not so healthy, but you want to try to get it as soon as possible, because when you start to get ailments, it doesn't matter. Once you're in the club of life insurance, you're in. You're in. And they can't deny you for any type of issues that you have once you have it. So,
right, and you can convert that.
Yeah.
And you can convert that over. You can convert
it over the whole life. You can pull money out. You got a whole life policy. But that's one of the major hurdles that I try to get over with people. They say they got it on their job. Just remember, when you go to job to job, it starts over. Normally, it's not even enough. It's like 10,000 or 15,000 in jobs. It's not enough for anything. It's the cheapest ever. That's why they're giving it to you during your job. But you're not going to be there forever. You want a policy that's going to outlive you. Not you outlive the policy. So definitely get that life insurance early as possible.
Yeah, and I think part of the problem is, in my opinion, is that when, like, for example, if someone says, well, I have life insurance on my job, I think they're looking at it from the wrong angle. They're looking at it as a cost.
Right.
It's not a cost, it's an investment.
It's an investment.
And if you look at something as an investment, then it completely changes your perspective, and it changes your motivation and your viewpoint on how it's going to eventually be used and become a benefit for you.
Yeah, because they look at it as a bill.
Right.
See, you pay Pepco, you pay for you pay your cell phone bill, you pay for your car insurance.
Right.
But the biggest asset that makes all that go is you.
Right.
That's right.
Because you are the money, and you're the money earner.
And it goes back, Herb, why poor people poor?
That is exactly why people stay in a certain economic stratosphere, because they have their assets together. And, definitely one thing I appreciate about Ray, he's a certified financial planner. And he's big into assets. He's big into people having that discretionary or developing that discretionary income. If I had this knowledge when I was 20, I would have been rich.
Oh my gosh.
I just think about the knowledge.
I wouldn't even be on this. I wouldn't even be here right now. I'd be covered in sand.
I would have been somewhere. And so we gotta look at that. And usually You look at the more wealthy Americans, they have life insurance. They have the stuff in order to be able to pass down inheritance. There's people out here who are socialites and have done nothing their whole lives because they were
That's
set up
right.
by mommy and daddy, and
Like
they're
our last
famous.
president. Our
Yeah,
last president, right?
you know, you like what?
Got a
What is?
$1 million loan
Yeah, what does Paris Hilton do? What is
to
she
get
good at?
everything started, right?
Yeah, what
Mhm.
do these folks do? They sit
Well,
back
that's an
and
entirely different topic because then what ends up
Yeah.
happening is you have those individuals. Okay, well, you know what? I'm not going to hate on them because their parents were smart
right.
Right.
and took care of them.
Right.
However, what happens is you get into an entirely different topic because you have these kids who are entitled
Right.
and don't know how to build character and
Right.
build work ethic. But what
Mhm.
we're trying to do here is we're trying to talk about right now. But yes, not only passing down something that's tangible, right? Because that's why it's called real estate. Number one,
That's right.
because it's tangible, right?
Mhm.
But we're also passing down the knowledge and the work ethic behind it, not just getting something for free and now it's mine and I can just go out and blow it, right? And buy a bunch of depreciating assets, which eventually go
Mhm.
away. You know, I won the lottery and I'm broke 4 weeks later. Why is that? But you're trying to give something to people that's going to last them a lifetime that will again roll over and accumulate. It's kind of like compounding interest, right? We want the knowledge to increase and the interest on top of that knowledge to increase. So there's compounding knowledge that we're going to be sharing for future generations. Listen, Jacobi is also a CFP. Did you know that? He's a certified
What's that?
financial player. Okay, he's breaking it down. I said it and I meant it.
Now, one thing I do appreciate about Jacobi is that Jacobi is not only been smart with some of the decisions he's made from a business standpoint,
Mhm.
but he's also cares about educating people that look like us.
Right.
Yeah.
So let me
And,
interrupt you real quick. Hold on, Herb. There's a question that popped up on the screen. Do you guys see it?
yep,
Let
I
me
see
read the
it.
question. It says
Yeah.
there's a question about
Read
home
that.
warranty from John. It says, when is the best time to purchase an additional warranty for the home, a new home versus an older home? What are some of the pros and cons? So can we go ahead, since we have some people watching live, can you guys
Yeah.
go ahead and
Yeah.
address that question?
Yeah. For me, I would say, definitely call your insurance provider, whoever you're with right now. Go ahead and add on the equipment breakdown because it's like $1 something a month. I mean, that's a no-brainer. So ask for equipment breakdown and get that
Equipment
added
breakdown.
on. Equipment
Okay.
breakdown, which covers all your appliances and everything, even televisions, computers. It's like $1 something a month. Go ahead and add that now because you just don't know when things are gonna go out. As far as the home warranty, I mean that's really on you because it depends on your budget because them things can get very expensive when you start to add a warranty on your washer and dryer, a warranty on your dishwasher, a warranty on your refrigerator. But there's companies out there that have bundle packages. I will go ahead and call and get some rates.
Mhm.
But the sooner the better because you just don't know when things are going to go out. And so I think the pros and cons is just having it and not having it. Being able to pay for certain things out of pocket. Do you have the money right now to buy a new refrigerator or a $300 dishwasher? So, it's all about budget. The sooner, of course, is the better. I would say. Herb, you can talk about that as well.
Yeah, and also going back to the service line situation, make sure you have the right endorsements on your
Yeah.
homeowner's insurance. That will take care of additional stuff.
What do you mean by that? Can you define what
Well,
endorsements
like
mean?
the service line protection, just like
Mhm.
Jacoby talked about with people digging in your yard, and the city said, "Well, hey, we ain't gonna take care of it," and a lot of
Yeah.
insurance companies like, "Well, I'm not gonna do it." Well, there's an endorsement that we provide that takes care of that service
Yeah.
line situation,
Yeah.
and
Yeah. Yeah.
and that's one of the things like Jacoby talking about the equipment situation. There's Jacoby has companies that help with that, and you got to find out what's going to be the best fit for you and your home with the right type of tools, and especially in
Yeah.
what area did you have your home,
Yeah.
you know? And I think
And
that's the key.
really quick, guys, before I forget, because this is the biggest misconception when you get that homeowner's quote. Even if you look at your homeowner's insurance right now, you're going to see a big number for personal property, right? You see this big number, 150,000 for personal property, right?
Mhm.
Right, Herb, Brandon, right?
Mhm.
For your personal property is always huge. I just had a guy, actually my former dentist, his home was broken into. They stole a bunch of jewelry, right? His personal property coverage on his policy said 250,000. So of course he's like, I want to get all my jewelry back
Right.
that I
Mm-mm.
had. I got 250,000. When you look at
Mm-mm.
that policy, just so you know, guns, furs, art, expensive chinaware normally has a max of like $2,500 to $5,000, and computers as well. You want to
Mhm.
get an add-on endorsement for the certain property that you have that's over the $5,000, or you want to get a personal article
The
policy,
personal articles
known
policy,
known as a PAP.
Personal articles.
You want,
Awesome.
yeah, you want
and
to
you don't
get that
and you
because
don't pay a
yeah,
deductible.
you don't pay a deductible, and
Write that down.
even
You don't.
if you're vacationing and your diamond ring was lost, the personal article policy will give you the money back for that, and there's no deductible. So
None.
that is the biggest thing when I first got into insurance was like so confusing to me because I'm like, I have all my clothes are covered. My wife's 20,000 diamond ring is covered. My watches, my Rolex watches are covered. But remember, and I'm gonna say this again: when you get insurance, it only covers $2,500 to $5,000 for one particular item. You want to get a PAP, personal article policy. You might have some art that's worth, $5,000 or $10,000. It's a possibility that it's not covered because it goes over and beyond the $2,500 or $5,000. Talk to your professional health insurance company or insurance professional about a personal articles policy.
Come
That's
on.
the best warranty. I think that's even better than the home warranty because you got these high-end items and they go lost or stolen all the time, and it's pennies on the dollar, right, Herb? Well, how much is
The
it? I
man,
think
it's
I might
like
have
maybe
yeah,
it's about
go
maybe
ahead.
$79 for the year.
For the
Some of
whole
these.
year, right? And
Yep.
you got a big diamond chain, you got a Rolex watch.
Hmm.
That's the best warranty. The personal article policy is if you ain't learned nothing from today,
Personal articles
call
policy.
protocol PAP, personal article
I
policy
wrote
to
it
cover your
down.
personal items. Yeah,
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 because
because I know
you want
Brandon got a bunch of stuff. I know he got I know he got some high end stuff.
Dude,
and
I
that-
am
and that-
Mr. Krabs, brother. Mr. Krabs.
and if you and I'm gonna tell you something else. If you have more than 3 cars in a home, you should have an umbrella policy, $1 million umbrella policy,
That's another
because people
Herb. Speak on that.
see that you have access, they will sue you. They will
Mm-hmm,
trip
mm-hmm.
over in the yard and sue you.
That's right.
And then people are
That's
like,
right.
"Whoa, you become a target." So
Mhm.
you got to protect your
Mhm.
assets with the right type of personal article policy, but also you got to have the umbrella
Mhm.
policy. The umbrella
Yeah, you
policy
hit.
will cover
Yeah.
you $1 million, and that's for the price of going to McDonald's.
Mm.
How
Mm.
about Chipotle or like Panera place a little
Yeah, yeah. I
more?
mean, the
Us
most I
organic folk.
yeah. Plus, you're
Yeah.
looking at like maybe $300 for the year for $1 million
Yeah. Yeah.
worth of coverage.
That's right.
Look,
And
little
and I talk about all the time. People in DC now riding these bikes. They get hit
Oh,
all the time.
Oh,
So
yes.
what happens? What happens? I mean, you're gonna get sued for 300,000. You have that? You need that umbrella policy. You never know, how much someone's gonna try to sue you for.
okay. So let me ask you this because we're going to end off in a few minutes.
Mhm.
Okay.
Anybody listening to this right now, whether it's the podcast, whether it's Facebook Live, these are gold nuggets. And this is why I have both of these men on this podcast, on this Facebook Live. I'm so grateful because I'm learning a lot myself. And this is real value that's being added to people.
Yeah.
So if you have, I don't know, let's just say you have your a 30-year-old, married couple, okay, maybe a couple of kids. Either they're renting or they're about to own a home. give me the main insurance policies or coverages that you would recommend. Now, I know it's going to vary, right? Because everyone's situation is different and they're different in life. But you mentioned the personal articles policy. You talked about whole life earlier. You just talked about umbrella. You talked about the Cadillac auto policy. A lot of this for the average person, it can be overwhelming. You speak the language.
Yeah.
So how do you translate? How do you bring the language down so that people can understand this and know the main things that they should have covering them?
Well, I think the thing is, like if you with a family, you own a home, you
Okay.
have 2 or 3 cars, so you want to make sure that your assets are protected
Okay.
from any outside forces that can steal from your cash. So make sure you have adequate liability insurance. Usually, I would say for a homeowner should have about $300,000 to $500,000 worth of liability insurance attached to their home.
Okay.
If you have multiple cars, your kids are driving, you want $1 million umbrella policy. It's
Okay.
about added $300, $400, but it's worth it because it protects your assets.
Is that $300-$400 a month or per year?
For a year.
Okay.
$1 million, $2 million, depends on what your assets worth. Then you got to look at life insurance.
Okay.
Do you start your kids off with $25,000 policies that you can build, which some of those policies have a guaranteed insurability rider that's attached to them, means they didn't increase it without having to prove insurability.
Okay.
And then you got to look at, okay, do I have retirement set up? Ray Mensa has retirement. He's the retirement guru. That's who's my mentor in the game of insurance. And and so in Jacobi and I will definitely educate you on what is proper for your family. So review your insurance because your insurance change from year to year. Your needs change. You might add a kid. Your kid goes to college. Things change from day to day. So you need to be talking to your insurance provider often, like once a year or 2 years.
Right.
And so that's the thing. And then not every life insurance policy is for everyone. Look at your budget. Okay, I'm gonna start off with a term, but you don't want to sit there in that term for 20 or 30 years without reviewing it because you want to know what the options are. With the conversion, sometimes some companies like State Farm will give you credit for converting your policy over and put that money into your cash value bucket.
So what's it sounding like to me, Herb, is that you really need to have a package of sorts, where that covers different areas of your life and provides for different needs. Is that accurate?
It's called the hierarchy of needs. You have your liability at the bottom, all your liability and risk. Then you have the growing assets. It's like a pyramid. You want to take care of your base first. That's one thing that I've learned is taking care of your base, and then you raise it up until you get to the top where you can have that investment money and stuff that you can play around with. And that's how you generate and protect your wealth. That's what I've been educated from Ray and Jacobi. Jacobi's one of my mentors too when it comes to certain things.
Yeah, absolutely.
And so I appreciate him because he educates me. Okay, what are you seeking? Because when you have those things protected, especially in business insurance, you got to make sure if you go in business, a lot of people are self-employed or own their own business, but they don't have the proper insurance. One lawsuit can put you under. We had a situation with a barber who used the wrong chemicals on someone's hair, and they sued him for $10,000. You don't have $10,000 laying around. And State Farm paid out. See, insurance companies like that big brother that has the money on hand if you need it. He don't always have it on hand for you because you don't want to be in a situation where you're always using Big Brother, but you want to use Big Brother as an emergency bailout.
Got it. Oh, that's good stuff. So this has been amazing. So Jacobi, I'm gonna give you the last word and what you want to share, and then we're gonna end off, brother.
I mean, I'm thinking about myself before I owned a home. If you go back, I know some people on YouTube, man, you need to really rewind this and start from the beginning and look over and over again at it. Take out a pen and paper because there's so many things that us three have already gone through. The knowledge that we've picked up along the way that we've given to you right now, so you don't have to have any pitfalls, any type of accidents where you're not covered for, your personal property. Life insurance is not covered. Anything that can happen. This right here was awesome. When I think about the things that we've said and things that we talk about, it's really amazing. So I mean, that's why I would tell somebody, go back, man, and somebody might have said something real quick, and you can always reach out to us and we can reiterate it, give you different ways to buy it and purchase it, and what this meant, that meant, what insurance. But man, it's crazy. An hour worth of like 30 years of knowledge, right in front of you before you jump out there and do anything. So, man, I really want to thank Brandon, Herb, bringing me on and allowing me to kind of, share my voice and help anyone I can, even if it's one person. It's worth it. It was just so important and so important. Yeah. So important.
No, thank you both. Listen, I've personally gained from this conversation. I know that the people watching on Facebook Live, have gained, and the people who will watch on YouTube, as you've mentioned, Jacobi, you guys are friends of mine. You are trusted, competent, real professionals. So listen, let me give a shout out real quick. Herb Johnson at State Farm Insurance. Okay, Herb, how can people reach you?
Well, they can definitely reach me at my office, 301-681-4450. Again, 301-681-4450 for your insurance needs. So you can also contact me by email as well, which is herb@mensah-insurance.com, MENSAH insurance.com.
Now, Herb, before we go to Jacobi, you got to do me a personal favor. I'm going to put you on blast. You got to sing it. You got to sing the State Farm little jingle. Come on, brother. Let's go.
Come on, let's do it.
Good neighbor, State Farm is there.
That's it.
Brian McKnight.
Shut it down.
Brian McKnight.
You know what, Jacobi, I'm sorry to bring you on right after that, brother.
Oh man, I definitely not singing.
So,
you might lose subscribers.
How can people reach Jacobi Jones?
Well, my name is Jacobi Jones. I'm an insurance agent, real estate. I'm an insurance broker, real estate investor. But look, I'm not even gonna give my information because there ain't no reason to talk to me before you talk to Brandon. If you want to contact me, call me at Brandon's number, 703-268-6750. Listen to me. If you don't have a home, don't call me. You need to call Brandon first because he's going to give you the rate.
Absolutely.
He's going to give you the know-it-all to buy your first home. Remember, we want to build wealth, right? Call Brandon. He's going to tell you how much to shop for. Call him first. Don't call me. If you already own a home, Brandon can refinance you out to get a lower payment. Brandon, low rate. Brandon can also, we talked about lines of credit. You need some money, call Brandon. He can point you in the right direction to pull the money out the home. Don't call me, call Brandon. You can email him, Brandon, BRANDON @visionarylending.net. You need to talk to him, and then he would put you over to me. But seriously, call guys, man. First time home buyer, no money down. If you're renting this, I don't know why. There's no reason. But you gonna leave your family. You can't leave your family that apartment. You understand what I'm saying? Call Brandon. I can't say that enough. You talk to him and he'll point you to me or Herb in that direction. So I ain't giving you my information. You want to talk to me?
Talk to that man, right?
Brandon first because he is the gatekeeper. Before you go shopping. Yeah, look, don't even go on Zillow. Don't talk to a realtor because you don't know how much you can buy. Talk to Brandon. He's gonna tell you how much you can afford first. And then we can go forward from there.
By the time you guys get to Herb and to Jacobi, they're gonna be ready. They're gonna be ready for the umbrella package because I'm gonna prep them for you. Okay, I'm gonna make sure that they get the initial basic education so they are ready to go.
Let me tell you, Brandon's gonna get you the money. he's going to get you the money like he got me the money. All right, and so you can go hit the beach with your sunglasses on.
That's exactly.
So you need to talk to Brandon so he can get you that money and lower your monthly payments.
Absolutely.
Yeah, that's what you need to do. Home ownership. If you already own a home, call him. If you're renting, definitely call him as well.
Brandon
All right,
is
guys.
the man. Brandon, before
Guys,
you
I
call
appreciate
me,
the love.
call Brandon. Call Brandon before you call me. Call Brandon.
Look,
That's
on the
right.
real tip, that's one of my love languages, words of affirmation.
Call
So I
Brandon.
appreciate it, guys. 100%. This has been amazing. Again, that's Herb Johnson of State Farm Insurance, Jacobi Jones of Goosehead. This is, look, we're going to do a part 3 at some point in the future. If you have any questions, any concerns, if you want your insurance needs reviewed, your portfolio reviewed, analyzed, critiqued, I promise you, I will connect you with one of these two men, one of these two gentlemen, so that you know for sure that you are getting the best deal possible, that you and your family are taking care of. Listen, guys, this has been Facebook Live, the Visionary Experience. One love, stay safe with you and your family. Thank you so much. We are here to serve. We are here to provide value. We are here to provide real service. Love you all. Take care. See you again soon.
All right. Thank you all.